Gotta test my audio. Should have tested that before going live. Welcome in, everybody. Welcome to the crypto jungle. My name is Baloo the Bear, and here on the channel we keep crypto simple. We look at the price in the context of volume using the Wyckoff method. If you're new here, I want to encourage you to subscribe. We try to eliminate a lot of the hype, eliminate a lot of the bullshit that exists in cryptocurrency, and try and help you make informed decisions from a technical point of view as well as a fundamental point of view. So let's do this. And it's gone. Yeah, so we're going to fill your account with some Ethereum, then we're going to go ahead and stake it into a liquidity pool. You may experience some impermanent loss, and it's gone. That seems what the market feels like these days. It's just down only mode currently, and nothing is more down than Olympus. Olympus is one of the strongest projects in all of crypto, with one of the worst retracements in crypto for a project of that size. So I want to take a closer look at Olympus and some of the fundamentals and why I'm not worried in the slightest. I still have a lot of confidence in the team as a whole, in their ability to achieve what it is that they're trying to achieve. And if maybe you're new to Olympus, you may not have a clear vision as to what it is that they're trying to achieve. So we're going to dive into the fundamentals a little bit more today. Olympus is killing me. It's best not to look. So why don't we go ahead and take a look at OlypusDAO right now. Oh, 93% down. 93, ladies and gentlemen. That is quite a substantial retracement. I've been touting OlypusDAO basically from $600. I was encouraging people to buy it at $800, and I'm still encouraging people to buy it. Olympus is not a quick flip. There is actually a ton going against you being a short-term mindset and a short-term trader with Olympus. Most notably is actually the APY. So if we go ahead and take a look at Olympus's main site here, and the APY. So when I first started talking about Olympus, it was around 7,000% annual percentage yield. And a lot of people got in, and a lot of people were really excited to receive that sort of yield, but it's kind of misleading, if I'm being perfectly honest. It's not your yield, it's the inflation rate of the token supply. This is a hyperinflational asset, meaning that every year, if nobody buys it, you're going to suffer severe sell pressure. This token has one of the largest amounts of sell pressure in it. This style, this genre of token, these DAOs, these high yielding, high APY DAOs, have incredibly strong sell pressure attached to them because of the rate of inflation with these projects. So they're a very long play. The way that this works is compounding yields. Honestly, if you're looking at the chart from a technical point of view, if you're looking at a crypto to take as a trade, a DAO is probably not the best one for you to be looking at in the short term for a quick trade, just because even on an uptrend, that sell pressure still exists. When you're in an uptrend on some sort of other asset, the supply's gone. Everybody's in demand mode. Everybody's buying. Everybody's wanting to mark up the price. And it's a very different animal. You're not getting that same amount of supply coming into the market. Whereas even when Olympus, or any DAO, even when Olympus is bullish and trending to the upside, there's still a ton of sell pressure coming in. It's just the demand is so prevalent that it's able to overcome those forces of resistance. So this really needs to be looked at as kind of a savings account. It's a volatile savings account. You don't put money into this thing if you're not ready to lock it away for a long amount of time. It's just, it is what it is. How is the Treasury supposed to support 7,000% yield? So this is a very good question. Basically, for every single OHM token that enters into circulation, there's one DAI of risk-free value attached to that. So in theory, Olympus's backing is $1. Olympus's backing for every OHM token, it's $1. Now, that doesn't really make sense to a lot of people because we're currently trading at $117, and we had all-time highs here of around $1,300, $1,400 for Olympus. All-time high actually was, just under $1,500. So how is it that it's only backed by one? So basically, that goes into the topic of runway. And runway, where is the runway? If we go to the OlypusDAO protocol and you go to the dashboard, you can see the runway, available runway. And what this is referring to is its ability to uphold that rate of inflation. So it can sustain 3,000, what are we at? 3,000. We can sustain 3,600 APY on Olympus at those current rates for 354 days. So it can go a year without anybody putting in a dime. It can go a year and keep that inflation rate going, with the theory that when that runway is complete, the value of the Olympus token should be somewhere around $1. So ton of selling pressure, ton of selling pressure. Why do people get in early? Because they want to be the recipient of these compounding yields. This is a DCA strategy. This is a dollar cost average strategy. The reason I'm so bullish on Olympus is not necessarily from the point of view as looking at this as a quick flip, looking at this as a quick trade. The amount of risk that you're assuming with a project like Olympus is massive, and the amount of quick money that you can make with Olympus is not very much. If you want to take a huge amount of risk for quick money, you should be flipping NFTs, honestly. Like, it doesn't get more risky and more asymmetric than flipping illiquid JPEGs. So, from a quick investment point of view, Olympus is not the play. Olympus is for those who can just stake and chill, hang out for a long time, because there is no backing. There is an intrinsic value, which is the value of the Treasury at the current price. So the backing per ohm is $73.17. But that's just at the current rate. If the inflation continues and nobody buys and nobody unstakes, at 154 days, the backing will be $1. The backing will be one DAI per Olympus. But let's talk a little bit about the fundamentals here. Bonds. It's all about the bonds. This is a central bank. What Olympus is it is trying to be a central bank. You can't DCA into Olympus with these gas fees. It's impossible. You can just buy GOM on Matic. You can buy GOM on Avalanche. You can buy GOM on Arbitrum. With the Protus protocol, the Protus incentive, liquidity incentive program, they have liquidity in some of these cheaper chains. So you can DCA. You just need to move your funds over to Polygon, which I advise people to have some funds on the Polygon network anyways. It's a very user-friendly chain that is kind of working with Ethereum in a lot of ways. But anyways, I digress. The bonds are what's going to be kind of the next generation of Olympus. Olympus is offering arbitrage opportunities, and anybody who purchases a bond gets to buy Olympus at a discount. Now, why would they do that? They're doing that because they want to build the Treasury. The value of the Treasury is what gives Olympus value. And when I think about the incentive structures of humans, human behavior wants to chase yield. Human behavior wants to get a discount. Human behavior likes arbitrage. So even though they're offering it at a discount, and that discount can be traded purely from an arbitrage point of view, you could buy $1 million worth of Olympus at a 5% discount. You just made 5% on that $1 million. It's a good arbitrage opportunity. It's going to drive the price down. But what happens in the wake of that price action is a treasury that builds itself out. So let's go ahead and take a look at the Discord here. They did just an update to kind of bring everybody back up to speed as to what is in the treasury. And we have billions and billions of dollars in this treasury. And they currently produce, I think, $75 million worth of passive income every single year. So that's $75 million, it's in the grand scheme of things, it's not a ton, but this is just proving the point that the greed of humans, the desire for arbitrage, the desire for yield, and the side effect of that, building the treasury, is where the value comes from. We're not getting rid of the Treasury. We're not moving those funds. We're only going to point those funds in safe and efficient directions to receive a yield. So nothing's changed. This is multi-year. This is multi-year style investing. Olympus is not a large percentage of my portfolio because I understand that this is a huge experiment, but it's an experiment that's been done in the past. This is how central banks start. So we don't have a central bank of DeFi. We don't have a central bank of blockchain. This is what they're trying to do. They're trying to create a treasury that produces funds, and those funds go into increasing the runway. The runway goes to increasing the stacks of Olympus to the OHM stakers, and then people make money passively. It's the same as yield farming, except they're kind of doing it in a different way where, you know, the yields, it's long-term yields. The current yield model is kind of parasitic because you're basically issued governance tokens, and what do people do with the governance tokens? They sell them, you know. People like to farm stables. You can get 20% plus yield on stable coins in DeFi. And, you know, when you have a governance token, you just sell it. It devalues the platform, devalues the protocol, and then the next thing comes out and we go over there. With Olympus, that doesn't occur. Now, it is volatile. It is a free-floating asset. It's going to do what it wants. It's going to do what the market participants say it's going to do. And this is going to cause extreme volatility. Extreme volatility. This is not going to be the last 90% retracement in Olympus. This is not the first 90% retracement in Olympus. We are going to see this consistently. I believe that this chart is probably going to be somewhat of an oscillator with a trend to the downside. So I'd be looking at something like this, you know, where you go up, we go down, maybe even for a new low, up for a new high, down again, and it's just going to trade sideways until we get to a stabilized asset, at which point the Olympus Treasury is going to be the biggest pool of liquidity probably in all of crypto. And it's with that we can have a stabilized market. You won't have to worry about liquidity in a bear market. You won't have to worry about liquidity in a bull market. There's always going to be another person on that trade. There's always going to be available coins. This is kind of something that's lost on a lot of people as to the importance of having somebody on the other side of the trade. You have to make markets. When markets aren't made, you can get stock market crashes. You know, the stock market crash was a liquidity issue. All of these kind of boom and bust cycles, it comes back to just the liquidity dries up. With a project like Olympus building this massive treasury, you know, the end game is it's not going to be the best place for you to make money. It's going to be the best place for you to park money. The people that are going to make money with this protocol are going to be the ones that get in early. But this is a big vision. You know, don't go all in on anything, and don't go all in on something that's such a large experiment. So Wonderland versus OHM, almost the same drop. Exactly. Yeah. What do you think about trade OHM looking at the market cap chart and not the price chart? Honestly, I would trade based on, I don't know if you're in the group, but we have the alpha numerics indicator, which you're going to want to use momentum indicators with an asset like this. Usually support and resistance is my go-to. I like to observe different key levels of support and resistance because traders step in at support, they sell at resistance. But because of the amount of selling pressure built into a token like Olympus, I think it's better to play the moving averages. So for those who are set up in the private group, shameless plug here, you can try our group for 30 days free. If you just scan the QR code there and sign up for FTX, you get 30 days free. But basically, the alpha numerics indicator is going to monitor the momentum. Right now, we couldn't be more bearish on this momentum. The momentum is down only. So I do feel as though we're kind of getting near the end. These volume signatures are really, really interesting to me. There's a ton of leverage inside of these types of platforms. Time Wonderland has a ton of leverage. Olympus has a ton of leverage. It's unavoidable that you're going to have these types of products being offered. It's referred to in the community as 9-9ing. So, you know, if you buy and stake OHM, it's 3-3. But if you take your own, lend it to Abracadabra, borrow money, take that borrowed money, buy Ohm again, and then stake it, it's called 9-9. And it puts a ton of leverage into this system. So these volume signatures, this is liquidations. This is just protocol liquidating. I think it was $200 million worth of Olympus was liquidated at this point. This is forced selling. The market is eager to buy Olympus. That's, if it wasn't, Olympus would be trading at its backing price of $70, but it's trading twice above its backing. So obviously there's a demand for Olympus, and with these positions now destroyed and this leverage out of the system, I would not be shocked in the slightest to see us reverse from here. But from those who are wanting to know about a clean entry, wanting to know about when to kind of get in when the momentum is present, we need to see the candles flip over this EMA. So right now I've got the 7 EMA. Until you can get above the 7, there's no ground. The bottom is technically not in. We do not have a bottom. We're actually breaking all of the lows here. We are in, the lowest price that Olympus has ever been at. And from a technical point of view, that won't stop. But from the fundamentals of the team, what they're offering, the bonds, the way the protocol functions and how it's building intrinsic value, which is, not typical of a lot of projects. There's no backing to a lot of projects, even Bitcoin. I mean, Bitcoin's backed by electricity and trust and users, but it doesn't have just a number attached to it saying, hey, this is what it's worth. I guess you could argue that the amount of electricity costs to mine a Bitcoin would be its backing. But regardless, this is fundamentally really strong. And if I was a betting man, I would say that we are at, if not very close to the bottom here of Olympus. It's not for everybody. This is a long-term play. But yeah, if you would like to, if you're in Olympus, it's times like this. If you're not heading to the exchange to add, don't even look. Don't even look. But yeah, to answer your question, Martin Corey, Wonderland versus Ohm, they're kind of different. I don't personally like Time nearly as much as I like Olympus. Half of Wonderland's treasury is actually in a leveraged position that the treasury themselves put it in. They took half of their treasury and put their stablecoins into a leveraged position. Now, everything's fine and dandy if MIM, Magic Internet Money, never loses its peg. But if Magic Internet Money, MIM, loses its peg, it's going to destroy the treasury. It's going to destroy the treasury. And I'm not trying to FUD, I'm not trying to scare people. I just want everybody to have like an informed decision on what it is that they're investing in. A central bank would never do something like this. So in my opinion, I feel like Time Wonderland is more of a hedge fund. It's kind of a shitty hedge fund because, a hedge fund, you should be able to get in and get out and kind of not experience so much volatility. But their approach is very different from Olympus in the fact that they're investing in more volatile assets. They're taking their stables and using those stables for very high risk plays that are dependent on stability. If, like I said, if MIM loses peg, it could be really bad. I don't know how leveraged they are, but half of the treasury, half of the stables are in those leveraged looped positions on Abracadabra. Not ideal. They're treating it very differently. Olympus is trying to build value with the treasury, stable, intrinsic, rock solid value, and Time Wonderland is taking on more risk. So another example of a treasury DAO that's taking on a ton of risk that's actually doing quite well is the Redacted Cartel. Butterfly. Let's take a look at Butterfly. But again, these are super, super high risk. It doesn't get any more risky than these types of plays. Redacted Cartel, Butterfly. And this one's heading into a down only as well. So a lot of the DAOs are getting into that down only mode. And until that flips, the trend is your friend until it ends. The trend is down. And with these types of protocols, it's down hard. It's not for everybody. It's you really need to have a lot of conviction on this trade. This will really test you. This whole concept will test if you have diamond hands or not. I encourage you to you should always do your own research. You should always have a good understanding of the protocols that you're investing in. And if you don't want to do that, that's fine. Just, trade something else, because there's a ton of sell pressure. MidasDAO doing okay? Yeah, we can take a look at Midas. Midas. Midas is another avalanche protocol. It's down 20% on the day, so I wouldn't say it's fabulous. But when we look at this is the price. Let's look at the market cap. Okay, let's look at the price. This is great. We found a floor here on Midas. This is actually something that you would want to see. A lot of volatility up here. I mean, it it got volatile. So Midas actually doesn't look that bad. Let's actually take a look at Midas. Take a look at the Treasury value. Full stack finance. That's what everybody's trying to do. Total stake, Treasury balance. Treasury balance is pitiful, really, really low. Incredible APY. From where it is, from a price perspective, the fact that it's holding a floor and it's giving you this APY, this could be a pretty good venture capital play. When you want to play venture capital on these DAOs and you don't want to get too involved, you don't want to get too risky, you could always just buy the index. And what I mean by that is there's usually a value associated with these DAOs, which is referred to the index. Let's see if we can enter the app and see what we're talking about here. Like in the example of Olympus, the index is currently 66.88. For those who don't know what that means, if you bought 1 ohm at the first block that it existed, you would now have 66.88 ohm. And this is the power of compounding interest. This is actually a good thing to take a look at here, because ohm's beginnings started, what's the low? The low, $144. So if you bought 1 ohm, coulda, shoulda, woulda, I get it. But if you bought 1 ohm at the beginning, you would now have, 66, you'd have $6,000. What is it? Is the math right on that one? I think my math might be shit. 66.88 times 144. Yeah, so you'd have about $9,000 in Olympus. So if you're wanting to take these venture capital plays, these more risky type plays, you can just buy the index. What's the index on Crown? It's $1.15. So give it a few months when the APY cranks down. Again, this is just one of many strategies. This is kind of, if you're going to play venture capital, put a little bit of capital in a lot of different places. But you could, this is like 50, 60 bucks. So if this does actually end up being something, given enough time, it's going to, given enough time, it should provide a yield. And that's what it's all about. It's about time. I mean, that's why Wonderland is called time. You need to give it time. If you're gonna try and trade this thing, it's just not the right coin. Honestly, there's too much sell pressure. You're not gonna get the exponential gains. You're just not. You're never gonna get those massive moves where you can capitalize on that kind of momentum. It's an investment. You're relying on the compounding returns. Olympus is at a 66 index. Why is the price of ohm different from GOhm? Really good question. Very easy to answer. So this is good. If you guys have questions about Olympus, I've done a ton of research on Olympus. This is one of the projects that I've done probably the most research on, because I started out my journey with Olympus trying to prove it was a scam. I enjoy that. I like to discredit projects and figure out reasons why I can come to you and say, guys, I think this is a scam. I tried to do this with Olympus and I fucking fell in love with Olympus. I think it's top 3 coin. I really do. It's a bold claim, I know, and I could be, completely delusional, but as far as the idea and the power of having DeFi liquidity stabilize the market overall, it's big. It's really, really big. You may not understand it now, but try to understand it. Spend some time. It takes hours and hours of research. So the price here, we got the Olympus price and we have the GOhm price. GOM is wrapped Olympus. So basically you take the price of Olympus and you times it by the index and you get the GOM price. There are a few advantages that GOM can do. Most notably is it's already staked. So you can buy GOM anywhere. When you go to Trader Joe on Avalanche Network, you buy GOM, you have staked Olympus. You can go to Arbitrum, you have staked Olympus. But what this also brings is the ability for centralized exchanges to be able to custody some of the Olympus project, because a centralized exchange like Binance or KuCoin or even Coinbase, there's no way that they would be able to build the infrastructure for customers to not only purchase Olympus and then stake it, they wouldn't be able to create the communication required to tell them, hey, you're going to lose money if you don't stake it. So with GOM, it's wrapped Olympus, and what happens inside the wrapper is the OHM multiplies. So if you buy one GOM, you're always going to have one GOM, always, but the index is going to increase. So you take the price, times it by the index, and you get governance Olympus, GOM. It's a really good project. I honestly think it's one of the best projects in DeFi. First time viewer, Lowe's, hello. I still have SOM and I need to migrate. Yep, you can migrate. I think you can even migrate onto another chain. I'm not 100% sure, but I think if you go to wrap, you're gonna have to pay some gas. But here's the thing about gas fees. When you're not doing something that's urgent, crank the gas down, crank the GUI down. Right now, GUI is at like 200 GUI. Go into the settings. Don't change the gas limit price. Do not change the gas limit price, but change the priority fee to like 2. And change the GUI to like anywhere from 70 to 100, depending on the market conditions. Just kind of monitor the lows of the GUI. And if you miss it, it's okay. Just post the transaction. MetaMask is going to tell you it'll fail. MetaMask will tell you this transaction is not suitable for market conditions. You just ignore that. You post the transaction. As long as there's nothing that you need to do that day or with that wallet, you can do these non-urgent types of transactions and save a lot of gas. It's the difference between paying like $160 to paying like $20, depending on the circumstances. If gas is really low, I actually got away with a transaction at 12 GUI. 12 GUI, it was like $5. $5 for an Ethereum transaction. It took 5 days to clear, but it did. I paid for a transaction and it was $5. So if you're more of a slower trader anyways, it's not the end of the world with these types of transactions. You can reduce the gas. Just do not touch the gas limit and you're fine, because the gas limit is what's required for the smart contract to be read. I've had it fail from too low and got hit with the gas fee anyways, or failed. I can't stress enough that you cannot change the gas limit price. So there's 3 boxes. The price at the box at the top, you cannot touch. That's required to even read the contract. The second one is the priority fee. That's what incentivizes the miners. You want to give them a little something. 2 is fine. 3 if you really want it to, get picked up in the mempool. And then the last number is the only number that you can change. And you can get away with very low numbers. You kind of need to monitor the gas of the market overall. And when you see these lows, kind of take note of the lows. Lately, the lows have been somewhere around 70. So if you put in a transaction at 75 plus a minor tip of 2 GUI posted at 77, it should clear. It might take a day, it might take 2, but depending on the market activity, it will clear eventually. Need to pay the gas fees through ETH. Yeah, if you're migrating, you have to pay, it's shitty, I get it. But it is what it is. You're paying for security. It's one of the most secure smart contract platforms that we have. It has some very innovative projects. If you want to be at the forefront of innovation, you got to pay a premium. That's my take on it. I realize that, basically Ethereum in its current form is broken. I understand that. It's kind of just a whales network. But there's a ton of innovation. There's a ton of security. There's a ton of trust. And that comes at a premium. It comes at a premium. So it is what it is. RoamDAO. RoamDAO is on Phantom, I believe. We're in a DAO mood today. Rome. First time chat from viewer. Cardano is looking bullish. Can you review it? Yeah, we can take a look at the price, but if you're new to this channel, I fucking hate Cardano. So just putting it out there. I think it's really overvalued. But yeah, we can look at the price because prices and charts don't lie, and it is looking bullish. I will say that. We will take a look at Cardano. RoamDAO. I don't know a ton about RoamDAO. What are they on? They're on Moon River. So Moon River as a sidechain doesn't have a ton of volume, doesn't have a ton of activity, but I do think that it's a good project, and a lot of these Polkadot projects are currently kind of undervalued. So yeah, RoamDAO, it looks doable. Let's take a look. What kind of rates do we have here? APY 99,000% APY. This intrigues a lot of people. This gets a lot of people really excited. But what do you need to keep in mind? This is also the inflation rate. This is the amount of selling pressure. It's this is a trap. It's a trap. It's preying on human behavior. It's preying on psychology. And why do they do that? Because it helps to build the Treasury. And the Treasury is the key piece. The Treasury is the most important part of this whole idea. And if they, get a few participants fucking wrecked in the meantime, so be it. They don't care. They don't care because this is a time-based game. This is not a quick flip. This is not a swing. This is an investment. This is a savings account. This is something that goes into the long-term category. But yeah, really high APY. The current index is 2.62. So you could buy the index and start as a venture capital play. Their bonds, no crazy discounts on the bonds right now. Really shitty ones actually. But I like how they have some stables in here and they're accumulating geom. So that means that we're going to see liquidity on Moon River. So we have Olympus liquidity entering Moon River, which is good. That's another place that you can buy cheap ohm. All right, so we'll take a look at Cardano. It's, like I said, not my favorite coin. I think it's really overvalued when you compare it. And you know what? I'll justify that statement here too. Before we get into the chart, I need to justify that statement, why I'm saying what I'm saying, so that you guys can just hear me out and listen to what I'm trying to say from my point of view. Here is the list, okay? Here are the top cryptos on CoinGecko. We have Bitcoin, obviously a valuable project. It's integrating into a lot of payment systems. I mean, you can fucking open up a Twitter account and you can get hooked up to the Lightning Network. It's a very established program. One of the most decentralized coins that we have in all of crypto. Ethereum, clearly a winner in the smart contract game. Binance Coin, it runs the BSC network. Tether, it's everywhere. It's a very important project. Cardano is valued at around $49 billion. It's nearly $50 billion evaluation. It's nestled between Tether and USDC. And then Solana, Solana, Terra, Polkadot, fuck, even Dogecoin has more utility than Cardano. Cardano has a huge community, a ton of hype, a lot of believers, and I think a lot of that has to do with the amount of presence that Charles Hoskinson provides for his community. So they get a lot of face time with the founder. That's the only thing that I can really think of. But Cardano does not have applications built on it. It has nothing built on it. There are the ability for you to do smart contracts, but there needs to be apps. And for me, I'm not going to sit around and wait while apps are built and try and get in early while all this infrastructure is being built. And if I am going to do something like that, I'm not buying a page 1 crypto. I'm not buying a top 10 crypto. The fact that it's number 5 with nothing built is all the reason I need to know that it's overvalued. That's my piece. But let's get into the charts, because it is looking bullish and we are curling up to the upside. So there's some bullish sentiment coming to Cardano right now. Whatever the case may be, there is demand. There is stuff coming in. Now, we do need to get above these EMAs. We do need to get above this line of resistance here. Right now, we're underneath resistance. So at this current price, this is not a good time to buy. You need to see how we react at this moment, because this might just be an automatic rally where we do trade sideways for a bit. In Wyckoff, we look for these reactions and we watch for a change of behavior. We watch for a change of character. So right now the character is down, and this is the first opportunity for it to kind of change that momentum and trade sideways. I anticipate that we find this area right here at around $1.75 to be a pretty strong resistance point for Cardano. I'm not saying that it can't break through it. I just think that it's going to struggle to get above that. If it does get above that, if we do see something like this in Cardano, where we can consolidate on top of that previous resistance, now support, now it's looking really good, because we'd be forming a bull flag on top of support. It would be all systems go, ready to go for Cardano to be able to take a trade. As it stands right now, we are underneath resistance. So I want to see this kind of cross bullish on the alphanumerics indicator on the 3-day. I think you're going to want strong confirmation for this. So if you're looking at it on the daily, it's probably already crossed on the daily. We got a bullish cross on the daily. We do have a bullish cross on the daily, but it's right underneath a really key resistance, right underneath a really strong resistance. We haven't broken the structure. We haven't even gotten above the previous wick. So there's still a lot that Cardano needs to work through in order for me to think that it's an appropriate trade. So it is what it is. Take a look at Rome DAO. We kind of did, I can look at the chart, I guess. It's not a trading view, but we did kind of cover it. Rome is having a campaign RPG game that will launch soon. You have to lock up some Rome to play. You earn NFTs and other rewards by playing. Do you think this is a good move, or do you think it will hurt the effect of the price? Do you think it won't affect the price that much? I'm not sure. I'm not hands-on with it. When you introduce the prospect of a game, when you introduce, especially a game that pays you, a play to earn game, you need to kind of, you need to assess the ROI of those assets, those in-game assets. You've got two worlds colliding. Now that gets a lot of hype, that gets a lot of buzz, but you've got two huge social experiments coming together. If DAOs fail, the game fails. If gaming and metaverse fails, the DAO fails. So you've got two very high-risk plays coming together and meeting for a play-to-earn, gamified, decentralized, autonomous organization. It's bold, to put it lightly. There's no way I can even begin to make an assumption on price. I don't even know what Olympus is going to do, and I understand Olympus very well. There's no way that I would be able to speculate on how a game would be able to affect the token price of something like, a DAO structured, high yielding coin like that. Cardano demand is coming from the Samsung partnership. Don't trust, verify. Where is that? I would like to find where you're sourcing that. So Congress X, if you're not already in the Discord, get into the Discord, drop us a link to where that information can be found on the fundamentals channel. And we will take a look at it, but I've seen it so many times where you get this big partnership announcement, the market overreacts, you get a reaction, and the partnership, proves to be false or embellished in some way. So a Samsung partnership, what does that actually mean? What does it mean for driving demand for Cardano? Cardano doesn't have a functioning product. What does Samsung want with something that doesn't have a functioning product? These are the types of questions you need to ask, and don't just take everything as gospel. There's a lot of bullshit out there. I'm not saying it's bullshit. I'm just saying go and verify the sources, go and verify the information, try and find some proof that that statement is correct. And when you do find proof that that statement is correct, what is in it for Samsung? Where does the demand for the token come from? How does that affect Cardano holders? What product in Samsung's suite of products is going to force people who are not, looking for an investment to purchase Cardano? That's the demand that you need to identify. Your Pineapple Express, hey, how's it going? So yeah, tell us, throw that in fundamentals. I'm interested to see. Can we take a look at EGLD? Sure. There's the server link right on cue. Looks like shit. Down only, brother. Down only. I'd be looking at this area back here. So let me get rid of some of these drawings. Let me turn alphanumerics off. Just got across on the 3-day on the alphanumerics. That is a lot of sell pressure. I'd be looking at how, So you're either going to find support here. So we're not far off. So you'd be looking to find support around 150 to 125, maybe a wick down through the support, saying 136, but maybe you get a wick down. If that doesn't hold, we're looking down here. So we're looking at anywhere from the $60 to $80, $80 range. So you can actually take note of both of those. When you identify these key levels of support and resistance, you can form a trading plan alongside of that. So if you are an EGLD accumulator, if you are an EGLD holder, you would have a buying opportunity if the price were to make it at this buy zone of support. And if it was to fail, you would get another opportunity to purchase if it were to hit this level of support again. That's basically it. Apart from the technicals, it's down only. So let's go to the daily here. Let's take a look at the RSI. RSI is presenting in confluence, so it's definitely going to be heading further down. I like this capitulation. This shakes out a lot of the people, the weak hands, the speculators, gets them out. That's what you want. It's going to slow down the reaction to the downside, but basically this will grind down. This will just continue to grind down at this point until you can get above this line of resistance. It's down only. Now, this shouldn't come as a surprise because Bitcoin's in the exact same posture. So as long as Bitcoin is in down only mode, which it is, everything should be in down only mode. Ethereum, down only. Olympus, down only. EGLD, down only. We'll see what happens with Cardano. It's under resistance in a market that's down only. We can actually take a look at total. Same thing. Kind of looks like a mix between BTC and ETH, but yeah, downward sloping line of resistance. It can't and will not do anything until you can break this resistance. So keep it really simple. Don't draw triangles. Don't draw any of that bullshit. Just there's the downward sloping line of resistance. When we break it by either pumping or trading sideways, now you have something that's going to either prove a floor or a trend reversal. So because we're below this, we remain below it. And it's really that simple. There's not a ton of demand in the crypto market overall right now. And when there's no demand, you grind to the downside. It's not that people are necessarily selling. It's just you grind to the downside as the trading volume is not favoring the bulls. It's favoring the bears. The order books are just going to naturally mark the price down. It happens. We don't go straight up. We don't go up all the time. We ebb and we flow. So right now we're on an ebb. He is lying. He loves Cardano. It's a secret. I'm just accumulating. When I'm done accumulating Cardano, then I'll flick the switch. When I'm done. I'm not done. I gotta suck it up. I need all of it. I need all the Cardano. And then I'll flip bullish. And then everybody will be like, oh my God, he's bullish now. We gotta get in. Does Geom rebase? No, it does not. The rebases happen inside the wrapper. The wrapped ohm contains all of the rebasing. Geom, one geom will always be one geom. So you suggest dollar cost average into geom rather than going at it all at once. Yeah, I think DCA is the way to go, and also make sure that it's a conservative percentage of your portfolio. I would not advise anything over 20%. It's a huge experiment. I have pretty good exposure, and I'm uncomfortable with the amount of exposure I have at 10%. It's a big anomaly. So, be conservative with that one. I was definitely BitBoy and Tony Johnny Crypto or something shilling it, that it's priced that high. Yeah, BitBoy's got incredible influence in this space. Avalanche is in reaccumulation, but fantastic project. It's one of my favorite side chains, actually. I really do like Avalanche. If you want a place to get Avalanche, you can get it at FTX. Sign up for FTX and get a free 30-day trial to the Crypto Jungle trading group, where we try to eliminate the noise, try to eliminate the bullshit, and give you the power to be able to make your own decisions in these markets. Let's go to a longer chart. It's been around the blockchain for a while here. Here we go. So no bullish cross just yet. We are range bound in this general area. Basically, anytime you see Avalanche at around 80 bucks, I think it's a good buy. It may dip below and kind of trap some of the leveraged traders. This is a strong asset. If we do break out of this channel, and get a bearish test, we're heading down to lower levels, but that's going to be really dependent on what the market's doing overall. Remember, everything is in down only mode. We're trapped below this sloped resistance. As long as we're below that, there's nothing to be bullish about from a technical point of view. Fundamentals are incredibly bullish. I'm at a huge divergence with my own portfolio because I am macro bullish on crypto overall. This is not a bear market as far as the on-chain data and the fundamentals are concerned. It's not. If you are buckling up for a 2-year bear market, I would take that bet. I would take the other side of that trade for sure. This is not going to be this multi-year type environment. This is just reaccumulation as far as the on-chain data and the fundamental data is concerned. But when the technicals are in a technical downtrend, they're in a technical downtrend. So you need to approach them with a bearish bias. And we are below that same sort of downward sloping trend. Anything below $80 is a steal. If it does fail to hold support and head down for a nice reaction down to around $50, I'm going to increase my Avalanche position considerably. This is a really good sidechain. If you're not playing in DeFi, if you're not playing with all of the the Ethereum alternative chains, Avalanche has incredible scalability, incredible throughput, really good gas fees. It's not the best of all the side chains, but there's always a trade-off. It's got really good decentralization, and it can't experience a 51% attack. It actually needs an 80% attack. So good luck to anybody who wants to try and attack the Avalanche network. So what I would, if I was a betting man, I would assume that we kind of, hang around at this lower end. If the market is shitty, we might get some price action to the upside if the market turns. But there's no real actionable event until you kind of break out of this channel right here, break above the level of the automatic rally. Also, any area down here would be considered the value zone where you could accumulate at a discount. So if you're wanting to accumulate at a discount, you're looking for it to break below. If you're wanting to catch momentum, you're looking for it to break above. Since EGLD is oversold, would it be a good time to get into it? I would say no. It's a downtrend. Wait for this trend to conclude. There's no hint towards this breaking out. You got to pay for confirmation. When you pay for confirmation, it means that you're not going to get the optimal price. Under the current context of the market, this will continue to grind down. So there's going to be better opportunities. Somewhere around $150 would be what I would guess. If you're DCAing and you're in it for the long term, it's your portfolio, it's your money, you do what you want with it. But from a technical point of view, given the current trading environment, not great. What do I think about Pulse Chain? I'm going to actually reserve comment on that one, and I want you to really, really do a ton of research. And when you do a ton of research, get the counterpoints included. I have gathered enough information on my own research for me to have the opinion that Richard Hart is a fucking con artist and that Hex is a scam. And as a result of that, I've completely discounted Pulse Chain. But go take a look. You can't just carbon copy every coin. It doesn't really work like that. It's not about the coins, it's about the liquidity. Pulse Chain doesn't have the liquidity just because it has a carbon copy of everything. What about Sol? It's been down only. Everything is. Everything. The whole market is down only with the exception of a potential Samsung announcement, which is yet to be determined on the demand side. Yeah, this is ugly. Ugly. I'm actually looking at this area right here, anywhere between $50 to $75. If that fails to hold, we're talking even lower levels, potentially even 20. This is a chart that really got out of hand. This is an asset that really took off in a big way. And this is one that I do think got overvalued. It's a great chain. Honestly, I love it. I think it has the best user experience. It's sexy, it's well branded, it's well marketed. It's a really good product. But I also think that it is overvalued. So would not be surprised to see us get to some pretty uncomfortable numbers for all of the people who are really bullish on Solana. Again, it's not financial advice. You can't predict the markets. You can only interpret the price action and where the probabilities are. But this gap, you know, this huge markup right here, this just massive move here. Look at the gap. There's nothing holding us up. Nothing. It's not good. Okay, so if you start to break out some of these support levels, meaning, you know, if we start trading below this kind of general support range, if we trade sideways here, great, fantastic. If you break below this support right at around 120, we'll call it $100 for confirmation, it's going down. It's going down to probably 30, maybe realistically those would be wicks, and it would probably stabilize somewhere around 50 to 60. But this is really important, and this structure looks like shit. So I would be very cautious with Solana at this. You know, it's not a dip I'm willing to buy. If it gets out of hand, you get a large retracement, absolutely I would be a buyer. But yeah, not financial advice. You can't predict the markets. You can only look at the conditions of the market and the probabilities based on the technicals and the structure that's been printed in its wake. Not a lot has been printed in this general area. We don't have a ton of support here. You got a little bit here, but it's weak. Weak. Really weak down in this area. So there's a lot of room. There's a lot of room, in my opinion. How long do you think this downtrend can go, or how low can BTC go? Those questions can't appropriately be answered. Honestly, it can trade to fucking zero. It's all about possibilities and probabilities. Whenever you're looking at the charts, you need to think about what are the possible outcomes. So we take a look at Bitcoin. You know, what is the possibility that we come back down to the bottom of the range here? What is the possibility that we revisit 30K? In this current environment, it's actually kind of a pretty probable outcome that we come down to 30K. Now, what is the probability that we come down to, say, 20K? Or yeah, right around 20K right here. It's absolutely a possibility, but its probability decreases. So it's, you know, the further down we go, the less likely it is that it's going to continue. So it's just about waiting for that switch. If you're going to trade these markets, you need to wait for that switch. You need to pay for confirmation. You have to wait for the bullish trend to appear. And in the current market conditions, with the amount of demand that we have, it's not good. When I think about the fundamentals, when I think about the on-chain data, the whales are accumulating. They just buy and buy. Every single day, they're buying Bitcoin. So there's a ton of accumulation. We are at peak levels of accumulation as far as the on-chain data is concerned. But that does not equate to price action at all. That does not equate to price action. We can still capitulate. We can still have the order books, just blast through. We can have liquidations occur. Just because whales are buying does not mean that we're at a price floor. So I'm not trying to sound bearish. I'm not trying to sound, pessimistic. But when I look at the technicals of this chart, we need to submit to the fact that the support levels are going to be weak. If we break below the support levels, we're going to go down to the next one. So if we break below this 40K, there's not a lot holding us up to 30K. I think 30K would be short-lived, but that's just my opinion. That's just what I think. That's just, what I can predict in terms of the market behavior. I can't predict a fucking human pressing the buy button. Nobody can. But I can understand that where we are currently is we have peak accumulation right now. We're at very, very high accumulation rates. And this would probably be a liquidation event, flush out the leverage, readjust the books. The supply will dry up, people will continue to buy Bitcoin, and we'll get a markup period. That's basically it. There's a probability we come down to 30 would be the probability that I'd be leaning on currently. But right now, we haven't broken 40. We haven't gone below this 39.5. As long as we stay above 39.5, this support area is valid. So as long as it remains valid, as long as we can hold this level, it's good. We're getting down to the wire though. We have to break some of these resistance points. It's very possible that we do get squeezed to the upside, but I can't tell you though. There's a possibility for 30K, absolutely. And that possibility for 30K would land us here at around 80 bucks on Solana. It would land us here at around 50 bucks on Avalanche. It would land EGLD at around, I don't know, 100 bucks. Olympus will take another dive. Everything will take a dive. And that's just purely based on how the order books are stacked. There's no demand. There's no people buying. I can't remember the company off the top of my head, but a very large point of sale company based out of the US that also has point of sale machines globally, where you swipe your credit cards, the point of sale, just acquired a ton of Bitcoin and they're building out Bitcoin nodes. So they're preparing for payment processing. There's going to be more and more payment process infrastructure built on the Bitcoin network that's going to drive demand. That demand has to come from somewhere. You can't run a centralized server. You're choosing to participate in a decentralized server. The only way that you can participate and be able to custody funds is by purchasing Bitcoin. So there is still a ton of demand for the underlying asset. It's just the traders and the order books and the demand that's going to the exchanges is not propping up the price. And we're in a technical downtrend and that will continue. Okay, I have run out of time. Pretty good conversation. Lots of negative bullshit to talk about. I'm sure everybody wants to hear all of that. Again, I don't think we're in a bear market. I think that the fundamentals are incredibly strong and crypto's volatile. That's why you're here. You're here to make the gains. But guess what? The gains come with downside exposure as well. It's just part of it. If you've found yourself into a hodl position, you need to incorporate it as part of your strategy. I have to get out of here. I got to get into the virtual classroom. If you like my style of analysis, if you want to be a part of the community where we're trading and sharing a lot of the projects that I think are valuable and knowing exactly that moment where the market is turning, where you can position yourself, I encourage you to join the Crypto Jungle. Go to thecryptojungle.com and sign up for VIP. That is all the time I have for today. If you enjoyed this content, please leave it a like. Don't forget to subscribe. And until next time, please trade safe. It is a jungle out there. There it is. Peace.